Hey everyone, Salesforce reported quarterly financial results that sent the stock price down 15.5%. What's interesting is that Salesforce was just slightly below expectations in the quarter in terms of a couple of key metrics, and then it downgraded the 2025 fiscal year expectations, and that sent the stock price down by more than double digits. In my opinion, that was an overreaction, and I'm going to discuss why I think that's the case. Of course, coming into the quarter, I had Salesforce stock rated as one of my top stocks to buy. And you're going to want to tune in because I will update that recommendation. I'll let you know if I'm downgrading Salesforce stock after these results or if I'm keeping Salesforce on my list of top stocks to buy. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, like I mentioned, the stock price collapsing following the earnings results. It's down 15.5% as of this recording. I highlighted already that I had Salesforce stock rated as one of my top stocks to buy here. I keep a list of top stocks to buy and I update it regularly. And for now, the only way to view this list is when I show it during videos. And so you'll notice here Salesforce on my list of top 10 growth stocks to buy and top 25 stock to buy. I last updated that on April 30th. I'll update it again after this video. So in the quarter, Salesforce first quarter revenue came in at 9.13 billion. That was up 11% year over year. That was along the lines of what management was expecting. First quarter operating profit margin of 18.7% was a little bit below expectations, and the current remaining performance obligations of 26.4 billion was up 10% year over year. Management was expecting 11%. What a big surprise to the downside, a whopping 1% lower. First quarter operating cash flow of 6.25 billion was up 39% year over year, and free cash flow of 6.8 billion, 6.08 billion, up 43% year over year. So the actual numbers, very strong, right? You have double-digit revenue growth, you've got double-digit increase in remaining performance obligations, and roughly 40% increases in operating cash flow and free cash flow. Strong growth to be sure, but less than expected. And here's an interesting case here, right? Now, in recent days, there's been three big earnings reports, and Salesforce is one that the earnings came in a little bit below expectations, and the stock price fell by 15.5%. But the actual growth, revenue increasing 11%, free cash flow increasing 40%, was strong. But another company I recently reviewed, Chewy, it had revenue grow by 3%, and the stock price jumped by 30%. And that's just the game we play in financial markets. It's because Chewy's revenue came in a little bit better than expectations. They were forecasting 2% growth. They delivered 3% growth, and they slightly increased their profit margin expectations. So those little slight movements, upgrades for the annual forecast, a little bit better than expectations, has huge swings following earnings. And if you were watching all of my earning preview videos where I was talking about whether or not you should buy this or that stock before earnings, I always mention that coming out of earnings, a stock price is always more volatile. It's always more risky heading into an earnings release. So if you're one of those investors that doesn't like the extra volatility, it's always more prudent to wait until after the earnings come out, let the stock price readjust, and then make your purchasing decisions after. But if you're willing to take the chance, stock prices are more volatile before and after earnings. Okay, so moving on to guidance. The company is maintaining its full year revenue guidance up between 8% to 9%. That was the same. It's slightly decreasing the 2025 subscription and support revenue guidance to slightly below 10%, and I'm going to share with you what the previous guidance was, and then slightly decreasing the operating profit margin, and then maintaining the operating cash flow guidance. So let's take a look at the comparisons. So just 3 months ago, Salesforce gave us their guidance for fiscal year 2025. This is the updated guidance. following the earnings results. So 3 months ago, they told investors that they were expecting for 2025 the operating profit margin to come in at 20.4%. They're now saying the operating profit margin will come in at 19.9%. So 0.5% lower than they previously told us. Not a huge change. The other downgrade is the 2025 subscription and support. They now say slightly below 10%. Previously, they said approximately 10% to slightly above 10%. So 10 or 11, maybe 12%, right, for this metric. Now they're saying slightly below 10%. So 9.2%, 9.4%, 9.6%, something like that. Not above 10%, but not significantly below 10%, right? So not a big difference in terms of that part of the business, and not a big difference for the full year operating profit margin guidance. So all of those, not a big difference. The other thing, the remaining performance obligations, it increased by 10% in the current quarter. Remember, I said they were expecting 11% increase here. Current remaining performance obligations for Q1 2025, they were expecting 11%. It actually increased by only 10%. So a small miss. Okay, so small misses here and there. But when you have a reputation for outperforming like Salesforce does, and then you miss, it causes a bigger reaction than is typical, because coming in, analysts are expecting you to beat expectations. And then they didn't beat expectations, they actually missed expectations. So the CEO is saying that they are at the beginning of a massive opportunity for their customers to connect with their customers in a whole new way with artificial intelligence. As the world's #1 AI CR customer relationship management company, we're incredibly well positioned to help companies realize the promise of AI over the next decade. So Salesforce is benefiting from the rising effectiveness of artificial intelligence, although not significantly. They're just slightly benefiting, and we're not seeing the results yet flow through to their revenue and profit margin. We are seeing nice growth in cash flow and free cash flow, but we haven't seen it yet in terms of increasing operating margin or increasing revenue. So interesting to keep an eye out here. Now, over the next 5 years, analysts on Wall Street expect Salesforce to increase its earnings per share by 16.22% over the next 5 years. That's down from 23% from the previous 5 years. So a slowdown in earnings per share growth is expected. Still, Salesforce now, after the sell-off, is trading at a forward price to earnings of just 24.45. And given the nature of the business and the competitive advantages it retains, the strong free cash flow, the strong backlog of orders, right? The company, even though it didn't increase as much as investors were hoping, they still have remaining performance obligations of $26 billion. Those are $26 billion of contracts that the company is going to turn into revenue as it serves those contracts. So it's got a nice backlog here of $26.4 billion, and its business model is relatively lucrative here, generating operating profit margins at roughly 20% and strong free cash flow and operating cash flow. So I still like the business. I like the valuation at a forward PE of 24. The quarter was a slight disappointment, but I think the stock price is overreacting to that disappointment. It wasn't what we were hoping for, but only slightly less than what we were hoping for. So it's no reason, there's not enough reason to justify a downgrade. I don't think there's enough reason to justify that huge sell-off. So I think this sell-off is a buying opportunity for those that are interested in Salesforce stock. I'm reiterating my recommendation here, keeping Salesforce on my list of top stocks to buy. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.